DCarsonCPA, MFC on the lines. Today's line is a little bit more about the personal financials, but also a cross point to entity level financials. The cross point is entitled Pensions, Retirement, and Investments Crisis in the Economy and Financials. The reason it's got that title is that more and more apparently, and with the eminence of Social Security and the funding challenges in Social Security with a large segment of the population being the boomers seeking to retire but having been offset by financial crises, there's a lot of offset crises in the economy and financials, but typically one of the concerns for many people at this point is pensions, retirements, and investments, and the crisis in the economy and financials. This is also a crisis because the amount of available capital in the economy is restricted by regulatory reserves, and regulatory reserves are increased to improve financial stability of entities like banks. But when banks become too conservative, lending slows down, and that means the opportunities for growth also slow down the economy, because the fact is you can't grow small businesses without access to capital and without some help on those lines. So in a way that you might not immediately realize unless you're dealing with this all the time, the pensions, retirement, investment cycle is very relevant to the growth cycle, which we talk about in DCarsonCPA MFC lines. And something very important here that we'd like to discuss are the pension, retirement, and investment challenges, for the reason that with large segments of the population headed out to retirement, there is a critical need to understand the funding of pensions and what's going on. Now, it had been for a long time. Now we're going to talk about the governmental level of this challenge. It had been that part of what entities use to inspire employees to bring them in is to set up retirement programs for them when they get paid today. And in the best of worlds, in the old world, you used to have entities and government would provide pensions. Entities, in government sector might not have paid that much, so they paid more on pension. And that pension would become a critical part for a public employee, part of the incentive for them to work with government. Now, this is beyond the conversation of the size of government or any of those things. This is just functionally talking about what could happen at that entity. Now, what happens is you set up retirement plans within federal, state, and local entities. And it's not just a matter that you set up a retirement plan and take deductions from employees, but you have a need to fund those retirements. So there's a concern about funding status. So as a federal pension is set up, as a state pension or local or regional or any enterprise service fund might set up, could perceptively set up a retirement plan. You don't know, there's many places where these things could be set up, but it's not just enough to set it up and say, yes, we're going to pay you this in the future, but you actually have to have some actuarial consideration that goes into it, some putting aside of monies, some matching of monies, and where will you put that money to grow money? Typically in the government center, what happens is that there is more of an arbitrary assignment because there is less of an open market factor of supply and demand. There may be the case that a government is contracted out to a industry sector investment manager or to some pension fund manager, okay, and then that manager has access to a more open line of supply and demand. But when these things lock up and stay in the government side, what happens is that there's more an arbitrary assignment, meaning that, let's think about Social Security. Social Security is set up, it's represented to the population as a retirement plan, but we know that there's this problem where it wasn't funded, and times, to nobody's fault for neither the budget, they needed those funds, they needed them in a time of great challenge, and so they accessed the funds. But what happened is net, you spend in advance of the funds you have, you draw down a fund, and now all of a sudden you face a retirement crisis because many people will be retiring, and everywhere you can see in the news as common information that the funding of the Social Security lines is going to be underfunded. So what does that mean? Eventually there has to be some tax increase or a raise in the age of retirees to make more beneficial use of scarce resources. In either event, it's kind of hard because individuals are paying in there, and there's many people who are underrepresented in the pensions, retirement, investment lines, segments of the population that don't quite have that access, don't have the education, or whatever the case may be. There is definitely a need, and we believe that a humanitarian right is a retirement. At some age, there's got to be a time where people are looked out for. It should be a function of individuals finding their way, but what if you have people that are working very hard in here and they can't find their way? What if there's factors beyond their own individual line where they trained well but they just ended up in a bad spot in the economy? And there's lots of people that have been downsized, that have had their savings erode and have gone through the crisis. So you can't just broadly say that People could have done everything they were supposed to do in pensions, retirement, investment, and they could have lost their money in their portfolios or had their portfolios being in risky assets, appreciatively being impacted and maybe decreasing and whatnot. So there's a lot of, it's a very complex area for pensions, retirement, investments, but we wanted to introduce the conversation that pensions, are a function of payroll and benefit cycles, a place where we can help on financials. It's a fiduciary function. We don't handle the fiduciary. We're not taking money from anyone for your pension, retirement, or investment funds, but we can help on the reporting cycles to think about, are we doing a good job here? Do we, for instance, have the right amount of assets going in rather than being arbitrary? Are we working with a rational strategy to make sure we're funded in status, to make sure that the factors of supply and demand are favorably working for us? You don't just want to invest retirement funds anywhere. You want to invest in a place where you'll get returns, and returns need to be more than market and more than inflation to appreciate growth, because typically what you want to do is invest some dollar value today that can grow to some future point with a compounding of interest and returns. And typically that's where all entities meet. You have the federal government, state and local, you have industry, nonprofits, and NGOs, and you can conceive that all of them have some individuals and families working for them, and all of those individuals and families have lines of payrolls and benefits, financials, and some fiduciary needs for help along the lines of pension and retirement and investment funding. So there's those pension plans, the 401k plans, the match sharing, all that. It's a good start, but there's some critical awareness in the broader economy. Why we work with pensions, investment, risk management, and insurance research lines is because there are these challenges. And that means there's an opportunity in government to help in the pension lines, to help look at funded status, to help communicate, well, if you can't fund it at a certain level, is that really a rational and a fair thing to do with a policy to set up a program that you can't fund? Or should there be some mechanism where, subject to a certain level of being underfunded, you trigger some mandatory event in terms of the funding action? Because it's no good. You can set anything up and say it's, government unfortunately can set up anything and say this is a pension, this is what it'll be, but it doesn't necessarily mean there's a rule corresponding to say that you have to have assignment of some funded status. So there's this kind of arbitrary world of supply and demand on the government side. And then there's a whole other line of the entity line of industries, nonprofits, and NGOs, and we could kind of anticipate that those lines for individuals and families roll out to the industry lines. And the industry lines have a little bit more of a market impact, so supply and demand are meeting there. And the supply and demand helps to match with more efficiency resources to needs. The market does request a fee for investment of funds. So if government, for instance, set up a fund and then delegated it out to market, which they sometimes do, they set up RFPs, they send out money to money managers. Those money managers will invest the monies. But there's also the question of efficiency. Not all mutual funds, not all investments are created equal, so you have a need to understand your expense ratios and how your investments do function. And that's a function of responsible stewardship of the pensions, retirement, investment lines in the economy and financials. And the crisis would be the failure to look at it, the federal, state, and local lines, potentially inability to set up pensions but not fully fund them. So you have these pensions that rise up, and more people are promised a pension, yet perhaps there's no commitment to the funding, which means that the day they come to charge out, you've got to spread forward. You're going to have to charge higher taxes, and that's kind of a hidden risk to growth in the economy. So we want to represent that these are all risks. It's a crisis in the economy and financials. You have underfunded pensions and underfunded benefits, and the need is to find better ways to equitably spread them out and to help to make sure that still we have retirement lines. Because I think when you think about broad societal lines, one of the things you could say about responsible citizenry is that in the middle line you have people, and assume they're in the prime of their health, assume that they have that good health and the good economic opportunity lines, are certainly in a strong position from which to contribute to the ecosystem. But there's also this crisis of the very young and the very old, or the temporarily infirm. Almost anyone could happen at any time in life. That you have a critical health event. Health is a primary and tangible financial asset in the way we see it, because if your health goes, many other things go. And so that kind of creates a position where there is a reasonable role, a reasonable thought to think the government has some connection to making sure that the very young, the very old, and the temporarily infirm are in some way covered. So that corresponds to health, housing, retirement lines. The question of the balance of where is where politics comes in and policy. But all these things are intertwined, and so the pension, retirement, investment lines are also key critical decisions, and we work with research on all financial decisions that infect individuals, families, communities, government, and industry. So we have some lines to help out on these. Find DCarsonCPA, the pension fin, DCarsonCPA, decision lines of the economy and financials, DCarsonCPA and risk, DCarsonCPA and investment management, all lines to think about the entity and societal needs with pensions, retirements, and investments. For the crisis in the economy and financials, we built these lines for twofold. We wanted to help on the entity and individual family needs, and perhaps someday with the economist, quant, and legal skills that we seek, we'll grow to a position to help on the policy lines, to help build controls, to look at pensions, funds, and funded status, to help remove some of the arbitrariness and remove it and place it back to a line of supply and demand matching, hoping to get some better efficiency and a better, more statistically wise optimization of resources to meet the benefit terms and the broad terms for any entity, not to pick on government, to think about government, industry, and individual families. Net, you're in a position of the economy, supply and demand, and how do you work with relatively scarce resources and unlimited wants and needs. If we can do this the right way, we can cure many of these problems. So I wanted to represent the DCarsonCPA as a support line here for those broader needs and for the immediate needs of entities and individuals and families. This is Dean Carson. Much more on these lines in the future and across our lines in daily research. Thank you. Bye.